If you have an awesome credit score and the bank still keeps saying denied, this video is going to show you why. Banks are currently rejecting nearly 75% of small business applications from owners with credit scores below 680 in early 2026. You just got the email and your heart drops into your stomach. You did everything they told you to do. You paid your bills on time. You kept your personal credit score at 800. You even have money coming in every month, every week, every day. But the screen still says denied. It feels like a punch to the gut because you know your business is good. You know you could grow if you just had the capital. But it feels like you are shouting into a dark room and no one is listening. You are stuck in a black box of rejection and you do not know why the door is locked. I'm going to tell you something that most gurus will never admit to you. Your personal credit score is not the most important thing to a bank. In fact, in 2026, it is barely the entry fee. If you have been obsessing over your FICO score while ignoring your real heart of the business that you operate, you are building a skyscraper on a foundation of sand. If you want to stop the cycle of rejection that you're going through, you have to understand one thing banks use to judge you before they even look at your name. This is the architecture of commercial credibility. By the end of this video, you will know exactly what the bank is really judging and how to rebuild your business so you finally look like a yes, not a maybe. The 800 credit score lie. For years, everyone told you that a high credit score was the golden ticket. They said if you just polished that number, the banks would throw money at you. But the world changed in 2025. Banks started using advanced artificial intelligence to look past your personal life. They realized that a person can have a great personal life on paper, but a very messy business. Your personal credit score only tells them how you pay for your car or your house mortgage. It does not tell them if your business is a safe place to put their money. Today, banks are looking for fundable entities, not just trustworthy people. They want both. They want to see a business that can stand on its own 2 feet. If your business is still tied to your personal life, like an umbilical cord, the bank sees risk. They see a hobby, not a company. They are looking for a standalone corporate identity that exists as a predictable borrower. This is why people with perfect credit get rejected every single day. They have the score, but they do not have the foundation, the MRI of your business. If you want to know what the bank is really looking at, it's your balance sheet. Most business owners spend all their time looking at their profit and loss statement. They love seeing the money come in, but the bank views your profit and loss statement like a movie. Movies can be edited. They can show only the best parts. They can hide the flaws behind special effects like aggressive accounting. The bank does not want to watch a movie. They want to see an MRI. Your balance sheet is that MRI. It is a snapshot of your actual health at one specific second in time. It shows what you own and what you owe. It shows if you have enough cash to survive a bad month. If your profit statement shows you made $500,000, but your balance sheet shows you have $600,000 in debt and only $10,000 in the bank sees a crisis, not something good. The rule of 1.25. The bank uses your balance sheet to find a number called the debt service coverage ratio. This is the most critical metric in 2026 and the foreseeable future. They want to see a ratio of 1.25 or higher. This means that for every $1 of debt that you have, your business must make $1.25 in profit. That extra quarter is the safety net. It tells a bank that even a sales dip or a machine breaks, you can still pay them back. Many profitable businesses fail because they do not have this cushion that I just told you about. If you net $100,000, but your debt payments or payables are $90,000, and you're not really netting $100,000, you are too close to the edge. In the eyes of an automated AI underwriting system, you are an instant red flag. These systems now monitor your transactions in real time. They see every spike in payroll and every drop in available cash flow. They are looking for stability and a healthy current ratio, which means you have more assets than bills due this year. Your fundability foundation. Before the bank even looks at your numbers, they check your fundability foundation. This is a system of at least 125 different data points. Think of it like a background check for your business legitimacy. If you miss just one of these, you might get an automatic rejection from a computer before a human ever sees your name. It starts with the basics. Your business name must be exactly the same on every single document. If you use an abbreviation on your business checking account with the bank, but the full name on your taxes, the bank sees a lack of organization. You need a real physical address as well, not a P.O. box or a UPS store. In 2026, a P.O. box is an instant disqualifier for most big loans. You need a professional business phone line too, listed in the 411 directory, and a website that matches your email address, not at Gmail or at Yahoo. If you are using a generic email like Gmail, you are telling the bank you are a hobbyist. You need to look like an institution if you want to be treated like an institution. If you are listening to this and wondering which one of those 125 data points you are missing, there's a link below where my team will run a fundability check on you and your business and show you exactly what a lender's computer is seeing, the map of your debt and the source of truth. The bank is also going to ask you for your tax returns, your personal financial statement, and your business debt schedule. Your tax returns are going to be their final source of truth. If you tell the bank that you make a lot of money, but you tell the government you make zero to save on taxes, the bank will believe your tax return. You cannot have it both ways. Then there's your personal financial statement, often called SBA Form 413. This is where they look at your personal assets and your personal liabilities. They want to see that you have some sort of skin in the game. If the business fails, do you have the resources to help pay the debt that they're going to lend you? They also look for something called contingent liabilities. These are debts you might owe later, like a loan you co-signed for a friend. If you hide these, it could result in a character issue as well. And that leads to a permanent no from that particular lender. Finally, you need a debt schedule. This is a map of every penny your business owes. It shows who you owe, how much you pay them each month, and when the debt ends. If the bank sees a loan on your credit report or balance sheet that is not on your debt schedule, they're gonna think that you're hiding things or you're just messy. Either way, they will not give you more money because of it. The 2026 reality check. The rules for 2026 are stricter than ever, especially for SBA loans. Most SBA approved lenders know that the SBA has reduced the limit for easier express small loans to $350,000. Anything above that is going to require a mountain of paperwork and a much longer wait, as well as oftentimes collateral. They also raised the minimum business credit score that they track for business loans to 165. That's called the SBSS. But in March, they're going to make that score no longer mandatory. So lots of things are changing every single week in SBA world. If you have a merchant cash advance right now, you're in even more trouble because you can no longer use an SBA loan to pay it off directly. And these SBA approved lenders are giving a lot more scrutiny to companies that have MCAs. You are standing at a crossroads. You can keep chasing a higher credit score and wondering why the doors keep slamming shut, or you can start building a real foundation. You can fix the 125 data points. You can clean up your balance sheet. You can prove to the bank that you are a professional that is deserving of their cheap money. We see these declines and approvals across thousands of files every single month, which means we know exactly what separates a no from a yes in 2026. Below this video, there is a link. If you are tired of the guessing game, of all the false information out there, click it and book a strategy session with my team. We will actually underwrite your file for free, just like a bank. We will give you a customized funding blueprint that shows you exactly where your foundation is cracked and how to fix it. We will show you exactly where you are on this map and the exact steps you need to take to get the funding you deserve. This is your chance to move from the struggle into a state of total credibility. Click the link now and let us build your blueprint together.